Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
If you're involved in California real estate, sooner or later you're going to run into a transaction with a foreign seller. And when you do, it brings up a specific, really crucial step that can trip up even the most seasoned pros. And that's the state's real estate withholding requirement. So let's break down exactly what you need to know. All right, here's our game plan. We're going to start with the basics, what withholding actually is. Then we'll pinpoint who's responsible for it. After that, we'll walk through their 4 main duties, look at the key exemptions, and finally, we'll cover what's at stake if things go sideways.
So let's just dive right in. First things first, what exactly is this withholding? And, why does California even make you do it?
Okay, this is probably the most important thing to get straight right from the start. Withholding is not an extra tax. Think of it more like a prepayment. It's kind of like a security deposit against the seller's future income tax bill here in California. That money gets set aside during the escrow process and then just sits there as a credit until the seller files their state tax return.
Okay, so if money has to be held back from the sale, who's actually in charge of doing that? Let's identify the key player at the very center of this whole process.
The official term the state uses is Remitter, but you'll also hear withholding agent. And honestly, in pretty much every single standard real estate deal you'll see, this job falls to the escrow company. They're that neutral third party who's already handling all the money and the paperwork anyway. Now we're getting to the practical stuff. If you are the remitter, what do you actually have to do? Well, the Franchise Tax Board lays out 4 essential duties you need to handle to make sure everything's done by the book. So the whole job really breaks down into these 4 steps. First, you have to notify everybody involved. Second, you have to verify the information you get back on the forms. Third, you withhold and remit the right amount of money. And fourth, you retain the paperwork. Now, let's zoom in on a couple of these steps that can be a little bit tricky. That verification step is a big deal. You can't just blindly accept whatever is on the form. The state actually requires you to use what you already know to be true. For example, if a seller claims the property was their main home, but you know for a fact it was their vacation house, you can't accept that exemption. You have to withhold the money. Now, when it comes to figuring out how much to actually withhold, you've got 2 different paths. The default way is super simple. It's just based on the total sales price. But there's also an alternative method that's based on the seller's actual profit, their gain. It just requires them to fill out some extra paperwork. And for that simple default method, here's the number you have to remember: 3 1/3%. So if the seller doesn't go for that alternative calculation, you're going to withhold exactly 3.33% of the total sales price. And hey, timing is absolutely critical here. Once escrow closes, the remitter has until the 20th day of the next month, that's right, the following month, to get the payment and the forms over to the Franchise Tax Board. Okay, so let's get into the situations where you might not have to withhold at all. This is where it can get a little nuanced, and it's also where we find the single biggest hurdle for foreign sellers trying to avoid it. First up, the easy ones. Withholding is just automatically waived in these 3 cases. No forms required. If the sale price is $100,000 or less, if the property is in foreclosure, or if the seller is a bank acting as a trustee, you don't have to do a thing. But, and this is a huge but, for any of the other potential exemptions, like claiming it was a primary residence, this is the absolute deal breaker. The foreign seller must have a valid individual taxpayer identification number, or ITIN, by the time escrow closes. And this is the question that comes up over and over again. What happens when the seller just doesn't have an ITN? Or maybe they can't get one in time before the closing date. What do you do then? And the answer from the Franchise Tax Board could not be more clear. No ITIN means no exemption, period. It doesn't matter if they would have qualified otherwise. As the remitter, your hands are tied. You are required to withhold the funds. So what happens if this process isn't followed correctly? Let's talk about the potential penalties for the remitter and, on the flip side, the path for the seller to eventually get their money back. I'm not going to sugarcoat it. For the remitter, getting this wrong is a serious, serious issue. The state can and will impose some pretty significant financial penalties for not following these rules correctly. I mean, this leaves it out pretty plainly. If you fail to withhold when you were supposed to, you, the remitter, can actually be held liable for the entire amount that should have been sent in. There are also separate penalties for late or wrong forms, and even bigger fines if they think you intentionally disregarded the rules.
But for the seller, that withheld money isn't just gone forever. They can absolutely get it back by following these 3 steps. First, they need to apply for that ITIN from the IRS. Once they have it, they let the Franchise Tax Board know. And finally, they just file a California income tax return. On that return, they report to sale, claim the withheld amount as a payment, and they'll usually get a refund for any overpayment.
So all of this really leads to one final critical question. Whether you're a buyer, a seller, or an agent, you have to ask, is your remitter, your escrow holder, fully prepared to handle every single step of this process correctly? Because making sure they have a rock-solid system in place is the absolute key to avoiding penalties and having a smooth closing for everyone.